Alright, listen up, folks. Today, we're diving deep into the ultimate dividend stock, a real heavyweight in Warren Buffett's portfolio, none other than the Coca-Cola Company. This ain't your average soda. This is an investment powerhouse. Now, buckle up cause we've got some major updates to cover in this vid. First off, brace yourselves for the bombshell. Coca-Cola just dropped news of a dividend hike. That's right, they're splashing more cash in the pockets of shareholders, but that's not all. We've got their freshest earnings report on deck. We're gonna dissect that earnings presentation like pros, breaking down every juicy detail. And hey, we're not stopping there. We're gonna crunch the numbers, do some serious math, and calculate the intrinsic value of Coca-Cola. Cause we're not just here to sip on soda, we're here to make some serious gains, baby. So grab your calculators and get ready to ride the finance train with us. Let's get this party started. Alright, let's break it down. My finance warriors, Coca-Cola's trading at a solid $60 per share, coming in hot at $59.80 to be precise. Over the past year, it's been holding steady, barely budging, just a tiny dip of less than 1%. But hey, over the last 5 years, it's shown some muscle, flexing with a 31% climb. Now, that's what I call some serious gains. But hey, let's keep it real. It's been lagging behind the market a bit during that time. Now, let's switch gears and check out those dividend metrics. We're talking about the sweet stuff, folks. Alright, check it out, finance fam. Coca-Cola's kicking it with a starting dividend yield of around 3.4%, beating out that market average. Now, that's what I call a solid start, bros, and listen up, cause they've got a track record that'll make your head spin, steadily ramping up those dividend payouts over the years. But hold on to your hats, cause we've got some breaking news straight from Seeking Alpha. Coca-Cola just dropped the bomb, a fat dividend hike of around 5.4%. That's right, they're upping the ante, boosting that quarterly dividend to a sweet 48.5 cents per share, up from a measly 46 cents. And get this, it's not just some chump change. It's beating the latest inflation numbers. Plus, they're not slacking in the earnings department either. Q for earnings. Right on target at 49 cents per share, with revenue smashing expectations by a cool 150 mil, up over 6.9% from last year. Now, that's what I call a power move from a seasoned player in the game. When we talk about Coca-Cola, we're talking about consistency, baby. 61 consecutive years of dividend payments, making investors swoon. It's all about that stability, that predictability, that slow and steady growth in those dividend checks. But hold up. Before you go thinking this is the end-all, be-all of dividend stocks, let me hit you with some truth bombs. You gotta see the bigger picture, my friends, and I'm about to lay it all out for you. Let's dive in. Alright, let's break down these numbers, squad. Yeah, we've been riding the dividend growth train for the past decade, no doubt. And that sweet 3.24% dividend yield. It's got us feeling pretty good, but hold up, let's talk payout ratios. Cause this is where things start to get real interesting. Check it, the payout ratio for the trailing 12 months. Sitting at a solid 70.2%, and the free cash flow payout ratio clocking in at around 81.58%. Now, here's where it gets spicy, that free cash flow payout ratio. It's for the trailing 12 months, brothers, so it doesn't even include that recent 5.4% dividend hike, you feel me? They're gonna be shelling out more cash to keep those dividends flowing. And yo, let's take a peek at the investor presentation, slide 31, my dudes. We're talking 2020 for guidance numbers, and check this out, they're projecting around $9.2 billion in free cash flow. Now, why's this a big deal? Cause remember that 81.58% 12-month free cash flow payout ratio. With these new numbers, they're gonna be dishing out even more in dividends. It's like pouring gasoline on the dividend fire, baby. Whoa, hold the phone, folks. We gotta take a hard look at these 2023 and 2020 for numbers. So, in 2023, Coca-Cola's kicking it with a cool $9.7 billion in free cash flow, right? But peep this, in 2024, their guidance is showing a slight dip to $9.2 billion. Now, let that sink in for a sec. They're gonna be dishing out more in dividends while pulling in less cash flow. It's like trying to flex on leg day, but your squat game's taking a hit, you feel me? With these new digits, that free cash flow payout ratio's gonna skyrocket. We're talking potentially hitting 85%, 86%, heck, maybe even 87%. Now, that's not exactly the kind of range I like to see my investments in, you know what I'm saying? And check out this chart. Fam, it's like a visual reality check. The blue line, that's the free cash flow, and the red line, that's the dividends being dished out. Over the past few years, those dividends are straight up devouring more and more of the company's cash flow. When a company's dropping most of its cash flow on dividends, it's like putting the brakes on organic growth. They're skimping on reinvestment. And that ain't a recipe for success. So, sure, we're all hyped about that 5.4% dividend hike, but let's keep it real. That payout ratio's climbing higher than a mountain goat on caffeine. It's not all doom and gloom, though. There's still a glimmer of hope in that recent earnings report. Let's dive in and find out what's cooking. Right, let's unpack this earnings report, folks. Organic revenue up a whopping 12% during the quarter, blowing past expectations like a boss. And check this out, consolidated operating income seeing a solid 10% bump year over year. That's the kind of growth that gets investors' hearts pumping. Looking ahead, Coca-Cola is laying down some serious predictions. Full-year adjusted organic revenue growth of 6% to 7%, beating out that consensus of 5.9%. They're setting the bar high and aiming to smash expectations, baby. But hold up, let's not forget where some of this growth is coming from. Sure, part of it's from crushing it in developing and emerging markets. But let's keep it real, population increases are playing a big role too. It's like they're riding the wave of global expansion, am I right? And check out this gem from the investor presentation, profit margins, baby. Coca-Cola's been steadily beefing up those operating margins, from 28.8% in 2018 to a slick 29.1% in 2023. Now, that might not sound like much, but for a juggernaut like Coca-Cola, even a small increase can mean big bucks flowing straight to the bottom line. Sure, when we look at those free cash flow growth rates, it's not exactly setting the world on fire. But hey, management's got their eyes on the prize, hoping to crank those numbers up a notch in the future. From around $8 billion in free cash flow in 2013 to a hefty $9.7 billion in 2023, they're definitely trending in the right direction. So, with all this juicy info on the table, the million-dollar question, is Coca-Cola trading at $59.88 a sweet deal? Well, let's crunch some numbers and find out if it's time to dive in or hold off for now. Alright, check out this gem. Coca-Cola's rocking a beta of just 0.59. Translation, you're looking at minimal roller coaster action with this stock. It's like the calm in the storm. Bros, low volatility, high stability, that's what investors love about this company. Now, let's talk valuation. Usually, we'd start with Graham's valuation, but let's keep it real. That's not gonna cut it for Coca-Cola. We need something with a bit more oomph, so let's keep it moving and explore our options. Alright, let's crunch those numbers and get down to brass tacks. After factoring in a growth rate projection of around 6% and throwing in all the other variables, we're looking at a discounted cash flow price per share of $44.25. Now, that's a bit of a dip from the current trading price, no denying that. Next up, we've got our multiples valuation. Now, there aren't a ton of perfect comparables for Coca-Cola, but if we stretch a bit, we're hitting an intrinsic value of around $77. But let's be real, that's not exactly the perfect fit for Coca-Cola. Enter the dividend discount model, the big kahuna of valuations for this company. We're talking about valuing a company based on those sweet dividends and how much they're growing over time. With a projected dividend growth rate of around 4% and a discount rate of 8%. We're looking at a dividend discount model price per share of $544. Now, that's the kind of valuation that really speaks to Coca-Cola's strengths. But hold up, fam, we gotta keep it real. If they can't keep that free cash flow growth on lock, they might struggle to maintain that juicy 4% dividend growth rate. So, keep those peepers peeled on that free cash flow growth. It's gonna be a key player in this game. You're bringing the heat with those valuations, my friend. So, when we average out that discounted cash flow analysis at $44.25 and the DDM at $544, we're looking at an intrinsic value of around $473. Now, that's a fair bit lower than the current trading price, no denying that. But hey, we're not in the business of overpaying, are we? With a solid 10% margin of safety, our acceptable buy price comes in at around $426 per share. Now, that's the sweet spot for savvy investors looking to snag a deal. Now, let's talk premium, baby, Coca-Cola. It's like the Louis Vuitton of stocks. Investors hungry for safe, reliable income know that Coca-Cola's the real deal. With its powerhouse brand and rock-solid cash flows and dividends, it's a no-brainer for those seeking stability. And hey, speaking of transparency, I gotta give it to you straight. Coca-Cola's not just a stock I talk about, it's a stock I walk the walk with. That's right, it's chilling in my personal portfolio. And check this out, I'm currently riding a sweet 30% gain on this bad boy. Boom! There you have it, folks, a deep dive into the Coca-Cola company like you've never seen before. Now, it's your turn to sound off in the comments below. What's your take on this iconic company? Are you thirsty for those dividends, or are you passing on this round? Let's keep the conversation flowing. Thanks a million for tuning in, fam. Your support means the world to us. Don't forget to smash that like button and hit subscribe to stay up to date with all the latest finance insights. Until next time, stay savvy, stay sharp, and keep hustling.